to today's episode of Revolve Commercial Podcast. I am your co-host for today, Samantha Riley, alongside our wonderful expert in commercial property, Mish Daniel. Here we are, Mish, for another week.
Ah, and wow, what a week it's been.
Oh, that's one way to put it.
It's almost like there's just such a different energy around. I don't know if
Mm.
everybody else is feeling that. And besides the topic that we're going to speak about today, I've been having a number of conversations with a couple of tech heads about what's been happening in the tech world
Okay.
with Google and Instagram and Facebook having been hacked. I was just on the
Mm-hmm.
line to my tech guy, and he was saying, oh, yeah, there's something like 60 billion sites that have been hacked with this massive tech hack. I'm,
Yeah, I believe it's passwords. It's not sites, it's passwords. And I believe it's double the amount of people that are in the world for the number of passwords that have been lost in this data breach. It's huge.
wow. Well, if you think about it, Sam, how many passwords do you have?
Oh my goodness.
Exactly.
Way too many.
Way
You
too
need a
many.
password for everything, right? You even
Yeah.
need a password if you want to order your McDonald's these days.
Exactly. So, I mean, it's like 60 billion passwords are out there. That's quite a scary thought. And on that note,
Absolutely.
I think we were actually affected by it as well because on Monday morning, everything just was not in the right places. So we've been,
Yeah, there's some real energetic and real world crazy things happening. Also, at the time of recording, just overnight, a ton of Facebook groups have just been shut down by Meta with no warning, just gone. Facebook groups with hundreds of thousands of people. And obviously, we all know that there's a lot of instability in the world right now in different
Hmm.
parts of the world. Feels like the world is just gone crazy, feels like it's tilting. So, with so much instability around, war, inflation, interest rates, can we cover the topic today? Is commercial property still safe?
Phew. You said the world is tilting. Yeah, you took the words out of my mouth. It kind of feels as if we're losing our axis.
Yeah.
Everything's, yeah. So, certainty in the world of commercial real estate. Well, my opinion about commercial real estate being probably what I feel is one of the most stable assets that you can put your money in. And I actually follow a couple of economics magazines and yeah, reviews and all that kind of stuff. And they were talking about what's happening in the US with regards, and this is just a little diversion over here, but I think it's quite interesting. In the US, there's a new company, and I'm not going to mention any names, that is now offering homeowners a 0% loan remortgage, and they're not calling it remortgage. It's got a totally different name, where they will give you up to 22% in cash of the value of your home, and they take 22% ownership of your,
Oh,
yes,
wow.
of your entity, and they're backing that by ethereal currency. So they're backing it by Bitcoin, which is, I'm just thinking, wow, that is major risky. So people who need money, who are not very informed, are going to go for that. You know, if people need cash out, they're not paying for it at 0%.
Hmm.
But should things go belly up, they don't realize that they're going to have to pay that back and they don't have the cash. They're going to lose their homes. Here we go again. Exactly the
Mm.
same thing that happened 18 or 20 years ago with the GFC. You know,
Hmm.
so
Hmm.
I'm just saying, Australians, heed caution. Do not
Yeah,
do that. Really. It's got to be backed by
that's
something
crazy.
stable. Yeah.
Yeah, yeah. So
Anyway.
let's talk about real estate, specifically commercial real estate, actually, even investing as a whole. What generally happens in times of uncertainty? And that's a bit of a weird question because straight away in my head, I'm like, well, there's been lots of different times of uncertainty and they can bring different,
Elements.
love the word, yeah, different elements. But
Yeah.
What are we looking at here?
Well, let's just take the elephant out of the room over here. Right now, Donald Trump has just gone and declared war without saying that he's declared war. Okay, his actions speak louder than words. And I think this is a very, very delicate area that he has put his big red boots into and has just caused the world to fall off its axis, really. Because I was reading up about it, and there's heaps and heaps and heaps of information to read and to listen to about it, and there's so many different opinions. But how is this going to be resolved? I mean, this is a delicate pending war that has been negotiated delicately over the last 10, 20 years, if not longer. And he's just decided to go and push the big red button. What does that mean? And depending on the retaliation, depends on international, I think, discussions. We're going to possibly the world is at ransom for oil. What does that mean? Diesel, transport, produce, all of this. Why would it affect us? Well, we'd right down here in Australia, but you know what? The rest of the world sneezes and we're the ones that catch COVID, realistically.
Mm-hmm, mm-hmm.
So I was having a think and a chat about it this morning, and I really haven't gone into it. So this is 100% my personal point of view, is if things do go that way, if this is the beginning of a war, of a real war, what is the world going to need? The world is going to need steel, artillery. So if anything, that might be, I don't know, a saving grace for Australia, considering that we're a huge supplier of various different commodities and steel being one. Anyway, I've gone down a rabbit hole here. I'm not an economist and I'm out of place even saying this. It's purely a personal point of view. So for me, in terms of commercial real estate, I do believe and have been through lots of trials and tribulations and come through a country that has been steeped in war for many, many
Mm-hmm.
years. And I have learned through my 30 to 40 years of doing what I have been doing that keep your nose clean and carry on doing what you can do. So in other words, if you can afford to purchase, property is the one thing that continues to go up. It gets disrupted by whatever's happening in the economic world, but it continues to grow if you can sustain the disruption realistically.
Mm-hmm, mm-hmm.
So, yeah, Sam, I think this my answer is loaded. I've touched on so many things here.
Now, there is a lot happening. Obviously, it all hasn't happened in the same week. It's been going on for a while. What are you seeing on the ground right now with investors?
Oh, look, it hasn't stopped. Investments are still going absolutely gangbusters out there. There's a shortage of stock. There are a lot of people that have still got a lot of money floating around, and they're just looking for good stock to purchase. So for those who are in that position, and this is an opportunity because smart money continues to move, it never freezes.
Mm-hmm.
So if you're being smart with your money, you'll continue to see the gaps, take the opportunities, and carry on growing your portfolio. I can tell you from my perspective, I'm seeing two different types of clients. We're seeing one client that's been saying, "Oh, I should have done this a long time ago."
Yeah.
And now they're coming into it and they say, "Come on, I need to get a property now. We need to get into the market right now." And we're doing our best to give them those quality assets. At the same time, we're seeing a lot of junk assets that are coming on the market where sellers are saying, "Oh, the market's hot. This is now the time to sell. Let's sell our properties." And those are the ones that are unprepared and probably not in the best position to purchase. So depending on what you're buying it at, if you're buying something that's slightly distressed with hairs, be heed caution, do your homework,
Uh-huh.
do it right, do the right thing, do the correct thing. Don't overpay for those kind of properties. And I've seen a couple of people who have done exactly that because it's cheap, inverted commas, they've purchased it,
Mm-hmm.
but in the long run, it's turned out to be very expensive.
Bit of a lemon.
Yeah. And then on the other side of things, you've got the other investor who wants to get into the market. And we were talking about that a little earlier today, where people who wanted to get into the market, I've got some clients that came into the program probably about 2 or 3 years ago, and we found them the most awesome property. And we were just about to go to contract. They got nervous and they pulled out of it at the last minute. I wanted to pull my hair out, but anyway, let's not go there. And they said, no, they're just going to put everything on freeze. That was 3 years ago.
Mm-hmm.
They wanted to come back into the market about a year or so after that. In fact, they did. And they said, can we go back to that property? And I said, no, mate, that ship has sailed. That property went up by 30%
Yeah.
in the 12 months that they were sitting on their hands.
Mm-hmm.
So they ended up paying 30% more for the property that they did buy, which wasn't the same one that we looked at the first time round, by the time that they did get into the market. So my perspective is every day is a great day to be buying a commercial property. Do your homework
Yeah.
right.
Yeah. So through things like the GFC, I'm going to say COVID because that was a crazy time, although I know what's going to happen here. Rate spikes. How has commercial property held up over those? Or has it been different through all of these different times?
Hard to say, Sam, but generally, commercial has always been the stability behind all of those other high spiking and low lows and all the events of the past. Commercial, I think the variation was, I once read that commercial fluctuates by around about 10%, while the other markets would fluctuate, residential would fluctuate by about 30%. And then exchange, of course, investments are very different. And then again, you've got all these new investments, ethereal currencies and bitcoins and all of that. Where are those going to go? We don't know because, they're not on the gold
It's not
standard.
happened before.
No, it's never happened before. We're living in the unknown. Nobody ever knows. Nobody knows what's going to happen to those. What's going to happen to all these ethereal currencies if the world does go to war again?
We don't know.
Who knows? The only thing that I think about is I think, gee, in the times of war, what is needed? Manufacturing, steel, food, resources. Where does all of that come from? It comes out of warehouses, out of commercial buildings, and all the primary and the secondary requirements, distribution, all that kind of stuff. I really don't believe that the world's going to stop spinning and we're all going to fall off. I believe that things are going to continue. And like any time of war, it's 5, 6, 7, 8 years, who knows how long of disruption. And then it's rebuilding again in stability. I think the biggest question to ask is, do you have enough to sustain yourself through that period? And a very famous saying is, real wealth isn't built in the booms. It's built during the uncertainties. It's the wise money who can see the opportunity, navigate their way around, and be making those wise decisions.
Yeah, totally. So you've touched on it a little bit, but what's holding strong? Is it the retail spaces, the industrial spaces, the medical spaces? What's your thoughts here?
Yeah, look, again, very difficult to, I wish I could look into the the crystal ball.
Oh, come on, Mish, look into your crystal ball and give us the exact answers.
Oh, hold on, let me just have a look at it here.
Oh, I wish.
Look, I strongly believe in retail, and I'll give you some statistics in a minute. We know that industrial is the sweetheart of the country, and there's a shortage of industrial. However, I've seen the market change a little bit in that area as well. So I kind of feel as if industrial's shifting back just a little bit. Office is still not my favorite. It's still not on my highest desire. And medical, there is always going to be a demand for medical because we are human beings and we require human touch. We require health, medical, everything that's associated with medical and allied medical, I think there's always going to be a space for. I just want to go back to retail. I mentioned retail. Think about this. Retail is 25% of every single Australian dollar spent.
Wow.
How's that? Yeah.
That's a great stat.
That suddenly thinking about that puts retail in a totally different light, doesn't it?
Mm-hmm.
But if
Mm-hmm.
you think about it, every single dollar that you're spending, 25% of it you are spending in retail. And it doesn't matter what retail you go to, whether you're doing hairdresser, face, beauty, clothing, shopping, Coles, Woolworths, food, consumables, whatever it is, it's 25%, if not more. So
Mm-hmm.
I do believe that retail is a great sector as well. Retail has not died, and I don't think retail will die. Office has changed quite dramatically, and I believe that industrial is always going to be strong.
Mm-hmm.
And during times of uncertainty, we would think that pending politics, that industrial will still hold fast.
Mm-hmm. Mm-hmm. So, would you recommend making sure that with commercial property that people are diversifying within the commercial property space?
Definitely.
Yeah.
Definitely. I mean, if you're holding a portfolio of all industrial, I would have really consider diversifying and going into retail, most definitely, and medical and allied medical and those sort of anything else that is in high demand. And in fact, another little statistic that I've thrown around a little bit before is in years gone by, in previous wars, the areas where money was being spent, men would gravitate towards the bottle store
Mm-hmm.
and the barber,
Okay.
pampering, okay, because it made them feel good. Drink
Mm-hmm.
alcohol, and it was, and go to the barber was just like a feel good, have a shave, have a
Mm-hmm.
haircut, that kind of thing. Women would gravitate towards health and beauty.
Mm-hmm. Well, we saw that in COVID.
There we go.
Skincare and beauty went off in COVID.
Went through the roof. Yep.
Yeah, not so much makeup because we were at home, but skincare really took off in COVID
And hair.
because, yeah,
Hairdressers. I mean, for the hairdressers that were able to be open, I remember speaking to my mother-in-law. She said to me, the day her hairdresser opened, she was the first one in there. I said,
yeah,
and I was saying to her, but why? What's the big thing? You're lovely as you are. And she said, it is about how I look, but it's how I feel. When
yeah,
I walk out of there, I just feel fresh.
yeah, and confident. I think you feel more confident when you're feeling good.
Yes, yeah. You
Yeah.
feel, of course, it gives you that element of confidence.
Yeah. So, what factors globally, immigration could come in here, are affecting demand? And where's the needle moving? I know that's a very loaded question. It's a very big
Mm,
question.
mm.
So, from a 50,000 foot view, what's that looking like?
Oof.
Oh,
Sam,
you're loving me today, aren't you?
yeah, you're giving me some doozies today. About that axis that is moving. Thanks.
Yeah, see, I'm all tilted. That's why.
Yeah, again, we got to look at statistics, and Australia most definitely is seen as the lucky country. So everybody wants to move here. Now, if you think about it geographically, if things are happening in Europe and in the Middle East, well, you can't get further away from it than Australia, can you?
Mm,
But what can Australia do and support and supply the rest of the world is where the question is. Yes, immigration is still pretty high. And as a nation, I think they've recognized that to build a nation, to build a strong economy, we need to have a bigger nation and a stronger nation. That comes with its problems that we're very aware of.
mm,
On the greater scale of things, I don't know what the exact numbers are, but I remember reading somewhere that Australia contributes 0.6% to the world's economy. It could be less than that because
mm-hmm.
we really do have a very, very small
Yeah.
nation. For a
Mm-hmm.
huge country, we've got a very small nation.
Mm,
So to grow that and to grow the economies, to create to stimulate the economy, you need to grow the nation. And I think that's where they've been going with it ever since COVID. They've realized that, and that's where they're going with it since COVID.
Mm, mm. So, what's your advice for protecting yourself right now?
I think it's what we're doing is reassessing all our mortgages, bonds, reassessing our properties, reassessing, have a look at what's happening in your property management. Where are your leases? Try and negotiate longer leases if you can. That gives you a little bit of certainty. That possibly you can give your tenants more certainty and they can give you more certainty with longer leases.
Mm,
Assess cash flow. And is your financial situation backed by solid assets? Because again, I'm not a fan, and everybody knows I'm not a fan of Bitcoin because I kind of feel as if Bitcoin is you can't touch it, you can't feel it.
mm, mm,
I was chatting to somebody during the week, one of the investors, and he said he invested when Bitcoin was going through the roof. He invested in Bitcoin, and he said it just didn't give him the same feeling because he went and put this whole pile of cash in there, but he got nothing. He didn't have anything tangible that he could hold on to, you know, and he just
mm.
watched it going up and down, up and down, up and down, pulled it out and bought a commercial property. And he said it felt good, the experience, because he was buying bricks and mortar because he could see the roof and the walls and the tenants and have that communication. People are different.
Yeah.
But I'm saying make sure that whatever you're investing in is backed by some sort of stable, you need some sort of stability. That's, yeah, in times of uncertainty, you need to find your stability, as far as I'm concerned.
So interesting. You mentioned looking for stability in times of uncertainty. Are you noticing or anything around finance? Is finance harder to get right now?
Ah. I have to bite my lip and stop myself from swearing. It's very interesting because interest rates are coming down. However, financial institutions are asking for more and more information and they're getting more and more sticky about it. So I'll give you an
Yes.
example. We had a client that's about to settle on a property, and we're sort of in those final stages and got 2 more days to go before the actual settlement happens. And they got approval in writing and they got all their numbers and figures and everything. And yesterday, just out of the blue, the financial institution advised them that they have dropped their lending rate by another 10%, which means that the buyer
Wow.
is now unconditional on a
Mm-hmm.
contract and is up for a chunk of money. And if they don't go through with it, they're going to lose deposits, finance, all of that, everything that they've put in. And the client was saying to me, how can they do this? How can they just knock 10% off what they had originally committed in writing to
Mm-hmm.
lend on this particular asset? Now he's got to come up with an additional 10% to make this
That's
go through.
super. That sounds so wrong, doesn't it?
It, Sam, and it's not the first time I've seen this. I'm seeing this
Mm,
more and more with kind of particular lenders. I'm not going to mention names,
mm-hmm.
but I'm seeing it more and more where they are just, being more and more stupidly stringent on certain things, which they really are testing the market. And
Mm,
what does that tell me? It tells me that they know what we don't know. They're pulling back. Why?
mm, mm, mm-hmm, mm-hmm.
Because those financial institutions find out a hell of a lot more than what Joe Blogs in the street knows what's going on.
Totally, totally.
You
So
know,
they're looking in their crystal ball.
yeah, I think their crystal ball more looks like interwoven passages where they're all communicating and talking and saying, oh, no, this is happening, time to do that. You know what I mean?
Yeah, totally.
So that just tells me that, they're seeing things maybe getting tougher, or they're wanting to be less risk averse. Why?
Mm, mm-hmm,
What
mm-hmm,
do they
mm.
know that we don't know? Okay.
Yeah.
I have invested and I've bought property through the highs. through the lows, through the mediums. I've just bulldogged and carried on. My philosophy is if you've got the money, don't put it in a bank because it's just going to erode and turn into nothing. Put it in bricks and mortar. Put it in something that is tangible, that you can touch, feel, that can grow. Irrespective, if you lose a tenant, you can still get a tenant. Make sure that you have enough cash flow to tie yourself over for the strategy that you're doing, but put it in something that is going to grow. And it might take you a year or two, but when it does, you'll be happy that you've done that.
Mm.
You know,
So, with everything that you said, is there anything that we would need to consider to be finance ready, to make sure that we're on the right foot?
well, again, I think it's a matter of doing your homework on yourself. Ensure that you are getting the right interest rates. Ensure that you are communicating with your financial institutions and that you are negotiating with them. And now's the time to really be negotiating hard. And if
Mm,
you're not getting the rates that you should be getting, change. There's hundreds and thousands of opportunities out there. People are still throwing money at the market. And if you can get it at a better rate, then do it. Read the
mm,
fine print.
mm-hmm,
Make sure that you're using a solicitor to ensure that what you're signing for is what you're really getting. And remember what I've just told you about the Bitcoin offer. It's pages and pages and pages of documents, but they're actually taking a lien over those people's homes and they take 22% ownership.
mm,
So make sure that any financial institution that might be cheaper is not always better.
mm-hmm,
Do the homework and make sure,
mm.
you know,
Due diligence, absolutely.
yes, yeah.
Let's flip this on its head. We've been talking a lot about all of the things that are going wrong. What kinds of deals actually get better during instability? Is it a thing?
Again, what kind of instability?
Mm-hmm.
I mean, you just take COVID, for instance. Who would have ever thought that takeaway food would have just gone gangbusters?
Absolutely. Well, I was sharing a story with you before we started recording. My son wanted to buy his first property and he'd been looking before COVID hit. And in the very early stages of COVID, he sent me a property deal. He's like, Mum, can you check into this for me? And I said, yeah, give me half a day. So I did my numbers, I did some research. I got back to him and I went, absolutely, you should jump on this. And he's like, oh, I don't know, Mum, it's a little bit over my budget. And we're talking like $10,000 over budget, not even a huge amount. It's like, I really feel uncomfortable about this. I went, look, I think you should. I think you should try and make this happen, but it's up to you. It's your money. He's like, no, I think I'll wait, because COVID, we don't know what's happening. And he let that property that was in the low 400s go.
Hmm.
And he's bought another property, obviously not exactly the same one, but at almost 900,000. That was
Oh,
similar.
wow.
So he like you can't, yeah, just because something's like not stable, you can't just say no and just walk
No,
away.
no. Look, he who hesitates loses.
Mm-hmm.
And that is the oldest saying worldwide through the ages. If you're hesitating today, you're going to lose tomorrow. The
Mm.
other thing that you mentioned is, and I see this all the time, where we negotiate a property and we get to a sticking point of 5,000 or 10,000. And I mean, we might be talking about a property that's 1 million or 2 million, whatever the value of that property is. And I always say to my clients, you're about to purchase a property for, let's say, $1 million or $2 million, and you're quibbling about $10,000. Is it worth it? Because you're going to be purchasing something that is going to be growing your portfolio exponentially, and the value of that property in a couple of years is going to be worth that 10,000 bucks times by 100. You know what I mean?
Yeah,
So
yeah.
if you get to a sticking point in a negotiation, it's always worth it because it might not be
Mm-hmm.
worth it to you today. But if the quality of the asset, if the property itself stacks up and you can see the value in it long term, then do it. It's
Mm-hmm.
really not worth stepping back from something like that. If you can afford it, then I always say do it. It's well,
Yeah.
really.
What are some of the biggest mistakes that people need to tuck away in the back of their mind right now? Because I think even though you're saying do it, it's still not about just jumping at anything, right?
No, no. Look, Sam, you know that I'm a huge advocate of due diligence. And I
Mm-hmm.
see, I mean, if I think about the number of clients that I've spoken to over the last couple of weeks alone, they bought properties in the spike during COVID, and they bought properties through buyers agents by themselves, and they have made the hugest mistakes by just not doing the numbers, not doing due diligence correctly, not doing market comparisons, not comparing the right rentals in the right areas with the right assets.
Mm-hmm. Mm-hmm.
So just to, if you're buying a medical property, that medical property is going to have a higher rental rate than a retail property next door. If you've got a medical property next to a bakery, the medical property is going to be achieving a higher rent per square meter than what the bakery is. So if there's a hairdresser next door to the bakery, next door to the medical, and they try to sell the hairdresser at the same rate as the medical, well,
Mm-hmm.
that you've got a question. Okay.
Mm-hmm.
Because
Mm-hmm.
there are a couple of things that you need to think about is how long can the hairdresser sustain that high rental?
Mm-hmm.
Have they been pushed into it unnecessarily just in order to make the sale? And something that I'm seeing in a huge way at the moment is lease back. And I see this every single day.
Mm-hmm.
Lease back. Well, I'll give you an example. We were having a look at a property, great little property, a little bit outside of the metro area, so a nice high yield, 7%. And they were selling the property with an ATM, and I can't remember what the other business was, but it was basically three rentals that were coming in. And one of the first questions I asked is it a leaseback? The answer was yes. How long have the couple who are the holding tenants, which is the biggest tenancy, been in the business? And they said, 20 years. And my next question was, well, how old are they? And they said, they're in their early 60s. And I
Mm-hmm.
said, and the rental that they're charging themselves was a slightly inflated rental. And I said, okay, let's just have a look at that. They're in their early 60s. They've run it for 20 years. They're tired. They're ready for retirement.
Mm-hmm.
The next thing they're going to do, they're going to sell the property. And then the very next thing they're going to do is they're going to sell the business.
Yeah.
Can that business sustain itself at that high rental? Okay, because that is where people make one of the hugest mistakes is that if that business does get sold and cannot sustain the rental, they're going to lose their holding tenant, their key tenant,
Mm.
which means that the entire value of their property is just going to collapse. And I've
Mm.
seen this, I've seen two or three instances of this over the last couple of weeks.
Mm-hmm. Mm-hmm.
The sad thing is, those properties actually sold to people that are not asking that exact question. We pulled out,
Mm.
we'd made an offer on one of those properties, and after all of those questions, I said it's not worth going there, so we pulled out.
Yeah. So really need to do due diligence, and you might not even know where to start. So this is a really good time to let you know that Mish does have a due diligence checklist at revolvecommercial.com.au, and the link for that will be just below wherever you're listening to this episode from, because I think it's really important. You don't know what you don't know.
Absolutely. I mean, we've got a free checklist on the website. We've got a lot of free information on the website. I mean, you can virtually educate yourself without my assistance if you were to go through all of our blogs, podcasts, everything. There's a wealth of information. I like to give it away as much as possible. I was chatting to one of my clients. She was in her mid 30s, and she said to me, Mish, why do you give away so much information? And I said to her, you know what? I've accumulated all of this information. I love to share it. I want people to know as much as they possibly can, because seriously, I might not be here in 15, 20 years.
Mm, mm.
I might not remember it in 15 or 20 years.
You might still be there, but
I might still be around, but I might not remember all of this. Who knows?
That's so funny. So grab it now. Grab
So
that
get
checklist now.
absolutely jump on, get it now. I was also going to say, besides the checklist was sort of the start of writing the book, the due diligence checklist book, which I think is quite comprehensive. And just a sidebar to that is you can never do enough due diligence, because when we finished that book, I could have written another one that was 10,000 pages, because there's just so much more and more and more information that comes in, and it's through the ages. For every action, there's an equal and opposite reaction. So
Mm-hmm.
it's the seller's action that would determine whatever the reaction is that you need to do in your due diligence and how you
Mm.
handle that.
And I know that due diligence is really important all the time, but I'm intrigued. Is it more important in times of instability, or is it kind of the same?
No ways. I would say most definitely. I think the more unstable that the market gets in times of instability, you're going to get a lot more desperate sort of sellers
Mm,
that are going to be pulling smart moves like the one that I've just told
yeah,
you about, you know, where if you're not asking those questions, and here's the thing, Sam, if you don't know what questions to ask, how do you know what questions
yeah,
you need to ask?
exactly. Yeah,
You
you
know,
don't know.
no, you just don't know. So, and I think that's where I say get educated, get help, speak to people who are in the know, who know how to help you to get the right outcome at the end of the day. What do you need to know? What do you need to do? What do you need to ask? What conversations do you need to ask? What documents do you need in order to make sure that you don't get burnt in this market and in any market, in anything that you're doing?
Yeah.
I was chatting to a client recently, and we were talking about due diligence, and I was asking about profit and loss statements. And in fact, I was speaking to the agent, and he said, "Oh, no, we're not selling the business. You can't ask for the profit and loss statements." And I said, "Well, actually, we can, because the property that we're looking at is very heavily, the price is leaning very heavily on the stability of the business that's in there."
Mm-hmm. Yeah.
You know, so this is where you have a little bit of a conflict, because the tenants have no advantage when an owner is selling a business, unless you have strike up a relationship with those tenants and say, to find out what their likes and their don't likes, the do's and don'ts, and find out more about the stability of their business. But it's a little bit of a tricky one, that.
Yeah. Get help. That's the message I'm taking away from this. Get help. Get
There we
help
go.
from someone that knows what they're doing. You've made that blatantly obvious.
Always. Always. It's as simple as if your car breaks down, you can't fix it yourself, get help. It's the same thing.
Yeah, yeah. So, Mish, to wrap this episode up in a beautiful little box with a bow on top, what is one thing that you want to leave us with from everything we've discussed today?
Sam, I think if you've got the means to make it happen, don't freeze. Do it now.
Mm-hmm.
No matter what's happening in and around the world, until a bomb lands on you, you can't stop doing what you're doing. You're going to wake up every morning, you're going to go to the toilet, you're going to have a shower, you're going to eat, you're going to go do your daily round. You cannot stop eating, living, breathing, building, growing, doing. And my philosophy has always been to just one step in front of the other, just keep moving, keep moving, keep moving, and growing and learning. Don't freeze.
Mm-hmm. Love it.
If you're listening to all the naysayers out there, hear them, but don't listen to them.
Mm.
Question them and do what is right for you in your situation.
Very wise advice. You've mentioned downloading the due diligence checklist. That might also be a good time to mention that if you're listening to this and you're like, yeah, absolutely, I do need to take the next step, that you can book a call with Mish to review your strategy or how things can work with you. And Mish, they can do that on your website.
Most definitely. And I am going to say my website was one of those that got hit by the technical plugins. Apparently there's been a hack of website plugins. Mine was one that has recently been affected by that. And hopefully it's back up and running. And guys, if you go to my website and it's down, please let me know. Reach out,
Yeah.
let me know. Because yeah, it's been a little bit of a technical hitch, but yeah,
Oh, that's just
thank you.
one of the many hitches that's hanging around the world at the moment, right?
Well, you know what? So long as we have technology that is running our lives, we are at its beck and call.
Exactly.
We're being held to ransom by all of the technology that's around us.
Yeah. Mish,
So,
thank you so much for sharing this very timely information with us right now. And let's hope the world tilts itself sometime soon. But in the meantime, you've given us a lot of great advice and a lot to think about in this episode. So thank you.
thank you, Sam. Really appreciate your time and doing these with you. I really love having these chats with you. I really, really appreciate.
Even when I give you the crazy questions.
Even when you give me the crazy questions, even better.
Oh,
So thank you for giving up the time and making this possible and sharing all of this fabulous information with all those people out there. And guys, if you're listening, please give us a little like. It goes a long way. Give us a review if you wouldn't mind. And share it with your friends. Tell your friends if you've got anybody that's interested in this type of podcast, please share it with your friends. The more it can get out there and the more information we can share, I think the better for everybody. So just
absolutely.
remember, fortune favors the informed. Get ready, go for it. Let's do this. Thank you.